Hi, my Bitcoin followers! 5 best ways to invest in Bitcoin for life-changing results. Cryptocurrency can be a rewarding investment, but it's not right for everyone. Cryptocurrency is famous for its volatility, as its price often fluctuates wildly from day to day. Even the most stable of them have experienced serious downturns. This isn't to say that cryptocurrency is a bad investment. However, it can be risky. Fortunately, there are a few ways to invest in cryptocurrency while keeping your money as safe as possible. These strategies can help maximize your earnings while minimizing your risk. So, in today's video, we will be telling you 5 best ways to invest in Bitcoin for life-changing results. Without further ado, let's begin. Make sure you enable all notifications to our channel, give this video a thumbs up, and don't forget to subscribe. And stay tuned for the hottest secrets and information of Bitcoin. There are ways you can expose your portfolio to cryptocurrency without actually purchasing coins, but proceed with caution and use the same diligence you would with any other speculative investment. Here are the 5 best ways to invest in Bitcoin for life-changing results. Invest in cryptocurrency stocks rather than tokens. The easiest way to get investment exposure to crypto without buying crypto itself is to purchase stock in a company with a financial stake in the future of cryptocurrency or blockchain technology. But investing in individual stocks can bear similar risks as investing in cryptocurrency. Rather than choosing and investing in individual stocks, experts recommend investors put their money in diversified index funds, or ETFs instead, with their proven record of long-term growth and value. Believe it or not, most individuals with a retirement plan or an investment portfolio allocated in an index fund already have some exposure to crypto, says Daniel Johnson, a CFP with Refocus Financial Planning. Tesla, which holds over $1 billion in Bitcoin and accepted Bitcoin payments in the past, is included in any funds that track the S&P 500. Since its 2020 inclusion, it's become one of the most valuable and therefore influential companies in the index. And Coinbase, the other publicly traded cryptocurrency exchange, is in the ARK FinTech Innovation EFT. Only invest a small amount of money in more well-known cryptocurrencies. It can be tempting to sink a lot of money into the next up-and-coming cryptocurrency in hopes of becoming an overnight millionaire. But very few of those investments end up succeeding, and it's difficult to make money with this type of strategy. A safer option, then, is to invest a small amount of money into cryptocurrencies that are more likely to grow over time. This can still be risky, as all cryptocurrencies are still highly speculative right now, and it's impossible to know for certain whether any of them will still be around in a decade or two. However, some cryptocurrencies are stronger investments than others. Investing in companies with crypto interests. That's how personal finance expert Susie Orman initially did it. She recently told Next Advisor about how she invested in MicroStrategy, a cloud computing firm that holds billions in Bitcoin, because its CEO was putting all of the company's working capital into Bitcoin. She figured if Bitcoin increased in value, so would the value of MicroStrategy's stock. But as anyone who follows Orman's advice knows, she recommends index funds as a much better investment strategy than picking individual stocks. Rather than buying shares in any single crypto-forward company, it's better to maintain a balanced portfolio by identifying companies with crypto interests and making sure their shares are included in any index or mutual fund you put money into. Not only does that allow you to invest in the companies where you see potential, but it also helps you to keep your investment diversified within a broader fund. If you invest with Vanguard, for example, you can use the site's holding search to find all the Vanguard funds that include a specific company. Just enter the company's ticker symbol, like TSLA for Tesla, and the tool will offer a list of all the Vanguard products that have holdings of its shares. Other investing platforms offer similar ways to search by company within indexed and mutual funds. But specialized ETFs or mutual funds can also come with higher fees than total market indexes, so pay attention to how much you are going to be charged for buying shares. Schneider considers an expense ratio, what you pay in fees, under 0.2% to be very low, and anything over 1% to be very expensive. For an already speculative investment, high fees can hinder your growth even more. Blockchain ETFs. ETFs, exchange-traded funds, operate like a hybrid between mutual funds and stocks. An ETF is essentially a group of stocks, bonds, or other assets. When you buy a share of an ETF, you have a stake in the basket of investments owned by the fund. While many ETFs, such as total market ETFs, have very low expense ratios, specialized ETFs can be closer to the 1% ratio that Schneider would consider very expensive. This will make less of an impact if more expensive ETFs comprise a small portion of your overall portfolio. Keep in mind the cost when considering options. ETFs are often grouped by what sort of investments they hold, so one way you can indirectly invest in cryptocurrency is by putting money into an ETF focused on its underlying technology, blockchain. A blockchain ETF will include companies either using or developing blockchain technologies. Many people who are skeptical about cryptocurrencies but believe in the transformative blockchain technology behind it see blockchain ETFs as a much more sound investment. Crypto ETFs. For would-be crypto investors who are deterred by exchanges or buying and holding actual coins, one simpler way to invest, via crypto or Bitcoin ETF, has remained out of reach until recently. The first Bitcoin-linked investment product, the BitGo Bitcoin ETF, launched in October after much anticipation. Plenty of companies, from crypto exchange Gemini to long-standing investment firm Fidelity, have attempted to offer Bitcoin ETFs. But so far, all other U.S. proposals have either been rejected by the Securities and Exchange Commission or remain under consideration. BitGo is Bitcoin-linked, but it's not a fund that directly holds the currency, but instead holds Bitcoin future contracts. While BitGo is a major step in bringing cryptocurrency to conventional U.S. investment portfolios, many enthusiasts want to see an ETF that holds cryptocurrencies directly. Aside from BitGo, the only similar option for U.S. investors today are private trusts that hold cryptocurrency, such as Grayscale Bitcoin Trust or Osprey Bitcoin Trust. These funds allow accredited investors to buy shares directly at market value, but anyone can buy secondary market shares through a brokerage account with a traditional firm like Fidelity. Make sure you enable all notifications to our channel, give this video a thumbs up, and don't forget to subscribe. And stay tuned for the hottest secrets and information of Bitcoin.